Gold as a repo asset on the global stage. We're not sure, but this is something that must be watched closely. What is China earmarking its gold for? And why did Russia stop exporting its extra gold? Viewed together, Russia's withholding of exports and China's absorption of supply suggest preparation for a parallel collateral market anchored in gold as opposed to U.S. Treasuries, as we have suggested.
Some of the world's gold seems to be quietly disappearing, and not because it's being sold. Vince Lanci points out that since the war in Ukraine began, Russia has rerouted most of its bullion exports through nearby CIS countries like Kazakhstan and Uzbekistan to avoid Western sanctions. The UK and Switzerland, once top buyers, have effectively been cut off. But here's the mystery. Recent trade data shows about 186 tons of Russian gold, worth roughly $24 billion, that can't be traced to any known destination. Lanci says none of it shows up in Russia's official central bank reserves, nor in domestic retail sales. That leaves one logical explanation: Moscow is stockpiling it. Instead of selling gold to fund the war or balance its budget, Russia appears to be hoarding it behind the scenes. That's especially striking because the government just boosted military spending by another 25% this year. Under normal circumstances, that kind of expense would push them to sell more gold, not less. At the same time, China seems to be following a parallel path. Lanci notes that the Shanghai Gold Exchange has seen a sharp rise in gold placed under warrants, meaning it's physically stored but unavailable for trade. Those holdings have surged 25-fold in 2025 alone. Taken together, it looks like a coordinated pattern. Major powers quietly absorbing physical gold from open markets. If that continues, the available global supply of tradable gold could shrink fast, creating pressure on prices and shifting more leverage away from paper markets toward real, physical ownership. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Since 2022, when the Ukraine-Russian war started, Russia's gold exports have largely moved through CIS nations, such as Kazakhstan and Uzbekistan, to bypass Western sanctions. The UK and Switzerland were off the list for them to export to. Yet, 2025 marks a break in that pattern, a significant break. Both of those nations show reduced re-exporting of Russian gold, with no sign of Russian-sourced gold coming into them. This is despite annual Russian production of approximately 330 tons. So the first question is, why are they not exporting gold like they did in 22, 23, and 24? Well, it gets more interesting. If they're not exporting the gold, where's it going? Well, neither is there any increase in Russia's central bank holdings or recorded domestic foreign sales. That's the red line in the graph there. This leaves up to $24 billion, or 186 metric tons, in unaccounted for gold and a growing mystery over its destination. Taken together, this data suggests Russia has drastically reduced exporting gold, but without any visible domestic absorption to explain where it went. We have a tentative conclusion. Russia now appears to be quietly hoarding gold. This accumulation coincides with rising military expenditures and constrained access to foreign currency markets, conditions that would normally push Moscow to liquidate bullion, and has done so in 22, 23, and 24, 23 and 24 especially. Not retain it. The simultaneous withdrawal of Russian supply on the global market, whether it be directly or through proxies, and China's aggressive acquisition of metal from Shanghai vaults points to a coordinated shift in gold's global function. And there's a picture of the Shanghai Exchange warrants. Now that is gold on the exchange that has been on the exchange, but now it's under warrant, meaning it's not available for those who would like to purchase it because it is now spoken for. That gold is there, but you can't have it. That's 86,565 kilograms, and it's risen 25-fold this year. That's what China has done. China has also effectively made less gold available to the market. Hoarding would be the word I would describe it. This is something we have discussed before last month, and no one really has discussed it other than us and Eric Young. Gold as a repo asset on the global stage. We're not sure, but this is something that must be watched closely. What is China earmarking its gold for? And why did Russia stop exporting its extra gold? Viewed together, Russia's withholding of exports and China's absorption of supply suggest preparation for a parallel collateral market anchored in gold as opposed to US Treasuries, as we have suggested. Where is the Russian gold going? Just as an aside, the Russian gold exports in 23 and 24, how they grew? Well, they grew in line with Russian military expenses. You sell more gold to finance your military expenses. But in 25, Russia's military expenses are up 25%, and yet their exports are down below 22 level. So consider that.
Vince Lanci says the market just pulled one of those moves that tests everyone's conviction. He had spotted what looked like a firm support level, one that should have triggered a bounce. Instead, prices sliced right through it the next day in heavy selling that he believes came from a major player, possibly a sovereign fund, trying to cap the rally. He called it a double tap, a second round of aggressive selling aimed at shaking out bullish sentiment before the next leg higher. Once that sell-off flushed out, prices reversed and began to climb again. Lanci now sees the next upside targets around 4,250 to 4,300, provided gold can hold above 4,100. The real test will come when it approaches the previous resistance zone, the same area that triggered the last sell-off. If it can punch through cleanly, maybe even with a gap higher, that could confirm the next advance. For traders betting on higher prices, Lanci's advice is simple: be patient. The market is probing to see if that big seller is still active. If the pressure fades, a sustained breakout becomes more likely. Silver's structure looks even stronger, consolidating just above 49.40 and setting up for a potential move toward 52.50 once momentum returns. Let's get back to the interview.
I identified a new ledge, thinking we'd bounce around in here. Well, we went there one more time, and the next day, yesterday, it just obliterated it. Now, I had warned that this was an echo of this sell-off. This is like, someone really big selling it, wink, wink, someone sovereign selling it. And this was an echo of them selling it again to keep it down. It's the double tap. And I thought that this might be a level that will not get broken through. So my alarm went off here. And here we are, scooting through that level, just blowing it away. And now we're bumping up against this. So I would say to you that since we're above this, we should, as long as we stay above 4,100, call it, 4,250, 4,300 are on the radar with a stop here. We have to get above this area right here, okay? And we may get above this area on a gap tomorrow morning. But just keep that in mind that this is where it was sold last time. Now, if you're bullish, like I am, you're looking at this saying, well, why is it stopping? Should I be bearish? No. The market is sniffing out to see if the selling is still there. And if it's still there, it'll retreat. It won't take it on because it was big. If it's not there, it'll keep bumping up against it for a couple days, and then one day it'll just pop through it. Anyway, that's my impression of things. Silver's easier, right? Here's your consolidation through here. We should run up. Let me see if I have do I still have the lines on this one? Yeah, through here we should run up. I didn't draw a line on this one, but we should go to 52.50 as long as we're above, 49.40. Now it's a little bit too high to be risking one to make one, but that's my level, right? In here, we're up there. If you want to look at it like from a very simple structure concept, you would say this here is a structure. This is the market, right? And this is this area up here. That's the froth, right? That got worked off. Same thing for gold. If you're looking at something like a currency, gold is actually right now a better placed currency and collateral than Bitcoin because they all have it. And if they use blockchain, they're going to pretend that that's, validated. I mean, that's why the silver people will say, hey, wait a minute. Silver is even more ubiquitous globally held. And that's the point. The point is gold's established network of 5,000 years isn't just history, it's dispersal throughout the world. And the US is ring fencing Bitcoin. And it will become the tool, I think, it'll become the tool of black markets. It'll become the tool of, instead of a pallet of money going over to a country, it'll be Bitcoin. So it's going to find its place. And it's eventually, if it survives, it'll be a central bank reserve asset. That's what we think. But it's not going to take over gold. Like Saylor is just marketing for market share. He just wants to make more money. That's all he wants.
Something subtle but profound is happening in the shadows of the global gold market. While headlines focus on short-term price moves, the real story is about quiet accumulation and strategic control. Russia and China appear to be tightening their grip on physical bullion, rerouting trade flows and locking away metal that used to circulate freely. This isn't about short-term profits. It's about insulation from financial vulnerability. When nations start holding gold off-market, it effectively removes liquidity from the system, leaving less metal available for trade and more tension between paper and physical pricing. Add in the sudden, heavy-handed sell-offs that look less like trader panic and more like state intervention, and the pattern becomes hard to ignore. The world's largest players seem to be preparing for a monetary landscape where gold matters again, not as a relic, but as leverage. As the metal vanishes into vaults, each ounce left in open circulation carries a little more power than before. If this quiet consolidation continues, could the next global financial reset be shaped not by digital currencies or policy reforms, but by the nations that already control the world's disappearing gold? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.